Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate the thumbs up. If not, consider subscribing. I want to talk about BBIG right now, and then we'll take a peek at AMC later today. I'll be doing more videos, but right now, BBIG, I said I'd do some more analysis. I want to follow through with that. This was the chart that I was showing last week, and I was very careful to give you both a bullish and bearish continuation level here. 280 on the bullish side and 253 on the bearish side. This 253 level held, price reversed, and broke 280 critical resistance. I saw this rising diagonal through here, and I said if it's a leading diagonal triangle, it cannot be in this supposed wave position C. It has to occur in wave positions A or 1, in which case we'd be looking at an extension of 1, 2, 1, 2, 1, 2. Which, of course, now has to be the case because we've had that bullish breakout and price is pushing up much higher. I was very certain to leave these bullish targets on here, including this 515 target. This changed a little bit because TD Ameritrade adjusted the charts for the split. Nonetheless, I was sure to leave this target up here with this critical resistance at 532. And sure enough, BBIG has made the bullish breakout, reached all of those targets, and then touch that critical resistance. And so now I've gone through and I've done the deeper analysis, the deeper dive into this stock. I haven't done a very good Elliott wave count here. This was pretty rough draft stuff here. I'm going to go ahead and show my updated chart. This is on the 15-minute time frame, a line chart. Take away the red and the green, just do it. We're going to go through here, and I'm going to start this count over again so that you can see what's going on. First, we had a push higher from 117, and this initial impulse would be A or 1. We had a horizontal triangle for 2 or B, and then wave C would have been right here, and this would have appeared like an ending diagonal triangle. But the waveform through these converging trend lines alternates between 5 motive waves and 3 corrective waves. 5-3, 5-3, 5-3. It's a bullish pattern. If you follow chart pattern analysis, you really need to add Elliott wave analysis to understand what pattern you're seeing. Because there are times where these patterns are not going to behave in the way that they are supposed to. But when you do the Elliott wave analysis, you'll see why that happens more often than not. So let's break this down. I've now got the minor 1, minor 2, minute 1, minute 2, minuet 1, minuet 2, and then sub-minuet 1 and 2. That's what I said it would be. It would be a 1, 2, 1, 2, 1, 2. Essentially what that does is it means that you've got 3 sets of motive waves in a trend that are all going to complete, and generally that leads to a large move in that trend direction. This is exactly what we're looking at. A beautiful breakout above 280, pushing higher, forming sub-minuet wave 1, 2, and blasting off to 3. And what I tend to do when I do this is I actually just take this extension tool and I pull it down to the specific breakout bottom or starting point. And you can see how these levels work out really well. And actually, this is the end of 2. This is 1, 2, 3, 4, and 5 at the minuet degree, completing minute 1. And when I do that, you can see that 100% level moves to 277, which is right at that 280 level, and then 161.8 is right at the top of the extension of the next set of waves in the sub-minuet degree at 339. Perfect. 1, 2, 1, 2, 1, 2, and that's where we get the leading diagonal triangle is in wave position 1. At the minuet degree. Remember, it can't occur in wave C, so it has to be in wave 1. And how is it going to be in wave 1? We've got 2 wave 3s extending. It happens in the middle of that. You can see this surge higher. What this means now, moving to the future, is we're watching for retracement for wave 4, and that target is at 431. Whether we get there or not, it's kind of irrelevant. It's not super important. It's not a rule. It's just a target. We got pretty close. We got to 446, it looks like. Nah, we could probably get a little bit closer. We could get a little bit closer. I would imagine we might actually hit that wave 4 target. And on this smaller time frame, you can see how we get more price data and what that does to the target. It pushes it around a little bit. But I'm not going to worry about that too much. Wonder how many that I can... Yeah, there we go. I can do Control-Z 3 times. Looking for the sub-minuet motive wave to finish. And that might be a truncated 5th. That's pretty typical. And so I have a wave 5 hanging out over here. And I wouldn't expect it to pass above the top of wave 3 at 538. In fact, what I'm expecting is a bearish divergence between waves 3 and 5. You can see that wave 3 came up to 86, so perhaps that actually won't happen because the RSI would then have to... oh, actually, it's very likely that it's going to happen because the RSI won't pass 86. But in which case wave 5 would need to pass that last high of 3. Anyway, it doesn't matter. Bearish divergence here, I think, is what I'm looking for, and I got confused in the middle of saying it. My apologies. After we complete the sub-minuet motive wave, we're looking for wave 4 at the minuet degree in blue. And that has a maximum retrace level to that 280 level. That 280 level then becomes our bearish reversal level. If we break wave 4, then the motive wave count breaks down and we go back to A, B, and C. It's really unlikely to see that. Wave 4 at the minuet degree touching down to 339 would be pretty extreme, but that would make sense to me, seeing that come down into the second wave level of the degree that extended. And then, of course, looking for wave 5 at the minuet degree. And then, guess what? Then we'll finally be done with wave 3 or C, but it's probably 3. I'm going to leave C up there anyway, at the minor degree, and we'll look for 4 and 5 at that time. What this means is now that we've gone through the double 3-wave extensions, we're looking for a sideways grind. We don't really want to see a lot of more progress at this point. We want to see consolidation so that the count holds. If the price does continue to run because you're bullish, that's good for you, but then my motive wave count needs to change again, in which case I'll bump everything up 1 degree so I can continue to add extensions at lower time frames. This is called fractaling. When the price is making these exponential moves, it moves through those degrees in order to do that, extending typically at the 3rd degree, or the 3rd wave, I'm sorry. There you go. This is my updated BBIG analysis. We've hit these bullish targets. We made the breakout. I've updated the analysis now, and we're going sideways. In fact, I'm going to make a note of that now. What day is today? July 24th. 2023, sideways for a bit. Okay, there you go. Happy trading.